Global stocks mostly lower after FOMC minutes. Wall Street stocks fell on Tuesday to snap a 5-day winning streak as July's retail sales dropped more than expected. Retail sales declined 1.1% last month, a steeper drop than the 0.3% dip expected after a 0.7% increase in June. In individual stocks, Home Depot fell over 4% after recording second quarter results. The company's same-store sales rose 4.5% in the period, below the 5% consensus estimate. As such, the Dow Jones Industrial Average fell 0.8%, the S&P 500 shed 0.7%, and the Nasdaq Composite lost 0.9%. Asian equities were mostly higher on Wednesday, with Sydney's S&P ASX 200 bucking the trend to shed 0.12%. Earlier in the day, the Reserve Bank of New Zealand decided to maintain the official cash rate at a record low of 0.25% against market expectations of a 25% hike. The Shanghai Composite Index edged 1.11% higher, the Nikkei 225 in Japan added 0.59%, and the Hang Seng in Hong Kong gained nearly 0.5%. European markets closed higher with the Pan-European Stock 600 index rising by 0.14%. On the data front, UK inflation data for July showed an unexpected dip to 2%. Meanwhile, July Eurozone inflation increased to 2.2%, its highest rate since October 2018. The inflation reading was higher than the European Central Bank's 2% target. In individual stocks news, Carlsberg shares rose 2.3% after the Danish brewer raised its full-year earnings guidance on Wednesday. The company said beer volumes in key markets such as China and Russia rose to well above 2019 levels. As Chief Executive Hart noted, while the uncertainty about the remainder of the year continues, we're satisfied with the strength of the first half results and the good start to the first quarter. Sales in the second quarter reached 18.69 billion Danish crowns, $2.94 billion, compared with a 17.97 billion crown forecast. The company now expects operating profit to grow between 8% and 11% this year, up from its previous guidance of 5 to 10% growth. U.S. stock benchmarks finished lower for a second day on Wednesday, with losses accelerating after the Federal Reserve's July policy meeting minutes showed plans to reduce the central bank's monetary support late this year. Federal Reserve officials ramped up debate around the timing of the eventual pullback of the central bank's easing monetary policies, according to the minutes of the central bank's July 27 and 28 policy meeting. The minutes showed plans to consider reducing the central bank's monthly asset purchases of $120 billion in treasuries and mortgage-backed securities, likely by the end of the year, but they also suggested interest rates could stay near zero for some time. Meanwhile, St. Louis Fed President Bullard on Wednesday also said the U.S. economy won't be derailed by the Delta variant of the coronavirus, but pointed to a red-hot U.S. housing market that should be monitored carefully. Boston Fed President Eric Rosengren said he would support tapering the large-scale asset purchases this fall because rising inflation and debt loads could eventually threaten the recovery. Tracking losses on Wall Street, Asian stock markets retreated Thursday after U.S. central bank policymakers made no firm decision on when to unwind their support for measures of the economy. The lack of a directive from the Federal Reserve fueled worries over surging coronavirus infections caused by the Delta variant and the pandemic's impact on consumer spending and jobs growth. Tokyo's Nikkei 225 slipped 1.10%, the Kospi in South Korea lost 1.93%, and the Shanghai Composite gave up 0.55%. Hong Kong's Hang Seng was down 2.03%, and Sydney's S&P ASX 200 declined 0.50%. Now the focus has shifted to next week's Jackson Hole Symposium. Traders will scrutinize Fed Chair Jerome Powell's keynote speech for hints about the timing of a taper announcement. The benchmark S&P 500 shed 1.1%, the Dow Jones Industrial Average fell 1.1%, and the Nasdaq Composite also lost 0.9%. On the data front, home builders started construction on homes at a seasonally adjusted annual rate of 1.53 million in July, a 7% decrease. Meanwhile, permits for new homes were issued at a seasonally adjusted annual rate of 1.64 million, up 2.6% from June and 6% from a year ago. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.